How about this, though? I got a new note that just dropped. Joe Terranova, thank you for sending this to us. It's by way of JPMorgan's Marco Kolanovic, who has some very interesting thoughts about where the market not only is now, but more importantly, where he sees it going in the near term. Joe, how about this? Kolanovic and his team says they say oil can go to 130 or 150 without causing much trouble, their model shows. And he says the fear of higher yields are also overdone. They say given the earnings power, I'm reading from the note, given the earnings power of corporate America and the relative valuation premium of equities over bonds, they believe the market can absorb a 10-year Treasury yield as high as 2.5%. It's about 100 basis points higher than we are right now. They say, quote, we don't expect a broad market sell-off unless yields were to rise above 250 to 300 basis points on the 10-year, which we don't foresee in the near term. Those are quite incredible comments. Joe, what do you make of that?
Well, I think I also love the sentence where he says, we believe this was the last significant wave and an effective end to the pandemic. I love that, and I know you do as well. But I'll tell you one thing. If those are the conditions, taper and tighten by the end of June in 2022. And I will tell you this. I think the Federal Reserve is already behind. November 2nd is the next meeting. The price of oil could be towards $90 by the time that meeting resolves itself. So if we get from Washington, D.C., a resolution towards the infrastructure bill and the social spending bill, I think the next day the Federal Reserve should be announcing tapering. I think it's so critical. The market needs it. And yes, we can endure much higher energy prices and much higher Treasury yield pricing for sure and still see risk assets move higher. I agree with Marco on that, but we need to taper, and we need to taper much faster than we're doing right now.
Doc, you believe that? 130 to 150 oil,
no.
2.5, 10-year, and stocks are A-OK.
No. You will see, and I know Joe has a long history in energy, but Joe and Marco are dead wrong about this. You see 130 crude, can we handle it? Well, I guess we'd have to, Scott, but can we handle it? No. That would impact the market in a negative way, almost as bad as 2.5% interest rates would, Scott. That's just a non-starter. That's going to blow things up if we see crude oil over 130.
Well, they say that the economy and the consumer did just fine from 2010 to 2015 when WTI averaged $100 a barrel. So you got to factor in things like inflation and all of that.
Sure.
Yeah.
And you got to factor in things that I don't know that this is the call that I would make, and I'd certainly be betting against it. If we see those numbers, I'll be long a lot of puts.